What's up, my dudes? I'm back. I wanted to give an update on my silver thesis, what surprised me, and what my expectations are moving forward. And again, this is not financial advice. The big surprise for me last week was it closing below $70. My expectation had been for it to close above for at least through the month. The choppy trading was, of course, expected. I mean, the prices can move like a golden retriever chasing hot dogs thrown from a spin caster. High energy, reactive, and directionally chaotic. I would also like to take a few minutes to talk about what caused the $115 price spike and what also caused it to slam back down again so quickly. There were, of course, a number of things at play, but basically what happened is people started to use leverage to push the prices up. COMEX responded by tightening margin requirements, which of course constricted the buyers and allowed the price to settle down naturally, in my opinion, of course. Now, it is important to note that what happened was what the intention was to happen based on the guardrails that were put in place after the Hunt brothers in 1980. And this isn't price manipulation in my mind, because it wasn't the COMEX saying you couldn't buy silver. It was the COMEX limiting the amount of leverage that you could use to purchase it. In fact, I would argue that using excessive leverage to push prices higher is closer to manipulation than forcing participants to deleverage. Now, my price target remains $50 long term, but I do want to take a few moments to talk about silver keeping up with inflation. Depending on the time period that you use, the inflation-adjusted prices can be surprisingly low. If you use 1990 as your starting point, for example, it can just be in the high teens. But I did find an interesting thing to support my $50 price target. First Magestic Silver, a miner building vertical integration from dirt to mint, in an interview entitled "Silver's Next Big Move May Be Built on a Much Stronger Base," around the 11-minute 19-second mark, First Magestic President Mani Alkhafaji stated, "We did the budget at $52 silver. This is a company making investment decisions of several millions of dollars, so their projections are generally quite conservative and backed by experience. They saw something that indicated higher than historical prices." These are numbers that I came across while researching their company, and I found it interesting that their projections lined up with my own. Their vertical integration means they have tighter control over the value chain and production timing. Again, this is a company that has more direct contact with the silver market than I do, which gives me more confidence in my current projection. And full disclosure, I did end up purchasing a stake in their company. Not that I think it's going to be trading at $50 tomorrow. In fact, I think it's going to take quite a time to settle. However, industry participants planning decades-long investments saw prices materially higher than historical averages for a sustainable period. And my $50 price target takes into account a couple of bad trading sessions. I have been purchasing silver above my target, and I'm perfectly fine with it. I'm not looking at selling. This is for those a little bit further down the trough. And actually, I'm quite happy with it, not with the price point, mind you, but because you can't start stacking until you buy your first ounce. This is also an investment that, unlike my current worst investment ever, is not likely to lose its entire value. Which means no matter what it lands on, it is not capable of becoming my worst investment decision ever. Pause and give me a like if you made it to the end, and I'll see you next time.